Just a quick one before we get started here. If you guys are looking to get funded, I'd highly recommend Funding Engineer. I've traded with them many times before and I found them to be the most trustworthy company to work with. They have 4 leading industry challenges here as we speak, and if you do want to support me, please do click the link in my bio and my description to sign up so I can continue giving away to you guys. You will also be entered into a bi-weekly giveaway when you sign up through that link. So that being said, we'll head back to the video. What is up everybody and welcome to today's new video, where in this one I am teaching you how to actually buy whilst we're still inside the breaker instead of waiting for price to break and then return to it. So often I know a lot of you have been asking me about this and you miss moves. I'm going to show you how we can predict when to actually get in without waiting for a return to this breaker so you won't miss a move from this ever again. So, getting started on this video, we need to define what a breaker is for those who don't know. A breaker is a simple formation where we have a high put in, a lower low, and then a higher high, and then price usually returns back to the breaker before going higher. The logic behind it is that sellers are put in at this point as we go below this low, and then buyers and the previous sellers are taken out up here with their stop losses, and then new sellers are tricked in above this high. It's the same thing here. We have a low, high, lower low, and then return to it before heading lower. Now I am going to show you how to predict that this leg here, so instead of returning, we just shoot straight up. I'm going to show you how to predict while we're still inside here. Inside this price leg, there is a trick to it. And inside this price leg, when it doesn't return, price will just move away like that. And I will show you how to actually sell inside one of these. So with that being said, let's get started on this. So the basics behind this is that we are basically anticipating a breaker forming. So before price actually forms its breaker by creating this lower low down here, we are anticipating with narrative and the fact that the higher time frame should move lower, we're anticipating that this high formed gets ran out here and then will break lower, giving us a run towards these equal lows on a lower time frame and the rejection block here. So with that logic in mind, without price actually breaking the breaker, we can predict where to buy inside this range. And as you can see, this is the breaker range here. We've got the candles which represent our breaker. Now, you want to basically apply this when there's not much news going on, so we don't have massive volatility in the market, and the economic calendar will show you when that's happening. So that is when we can actually partner this with something else to predict how it will form and what days it will form. Like when we have a red news day, for example, price will leave quickly and then it might actually return. But when we have low hanging fruit days where we're aiming for small pip objectives, this is useful. Basically, the main logic behind this is that we take the range of our breaker. So if I take the high to the low of our breaker block, you can see that we now have a premium and we now have a discount. What we want to do is we want to look for any PD arrays in a premium when going short that we can sell from while still inside the breaker. So first of all, we're anticipating when the breaker will form before it forms. And then we want to use premium and discount to frame either buys or sells whilst we're still inside this breaker. Obviously using a PD array. So let me show you this example here. If we're looking at the range we've got here of the breaker, you can see our equilibrium is the 50% level. Then we have our OTE levels, but if you ignore them, I will take them off for you now. If you ignore them, we just want our premium and discount. Can you see, so our premium is the top half of this range. Can you see any premium arrays that we would like to hold inside this top half of the range? Straight away, my eye goes to this level here. We have got an up close candle after a move lower. We've already taken out liquidity with this run. And now this up close candle should be used as actual resistance and should support price lower when we trade back into it. This is our bearish order block, and you can see it is in fact above 50% of the range when going short, which is exactly what we want. So the logic behind this is we would take a sell, you could put your stop loss above the order block's high, or this swing high if you want to be a bit more conservative, and we'll aim for, let's just aim for a 1 to 3. That's a really good RR. But you could aim for the rejection block here, or these equal lows on a lower time frame, or any discount array really. But notice how we've created the high, low, high, high, and without creating the lower low below this low back here, which would actually make our breaker, we can predict when to sell whilst inside the breaker. So we're anticipating a breaker to form, price retraces back to 50% of what that breaker would be, and then we look for PD arrays to frame a sell off of that. If we fast forward here, you can see you get tagged in, and then price tags us in one more time before actually moving lower down towards the equal lows and our target of a 1 to 3. Now you can see there how useful this would be to us, knowing when to sell whilst inside the breaker, giving us a huge risk to reward, rather than if we were to wait for price to break, actually getting down here. Let's say you got in down here, your stop would be above this high, and then if you targeted this level, that would be a 1 to 1. Now I personally don't take anything less than like a 1 to 1.5 really. I would not take a 1 to 1. Right, so the logic here is that before the breaker even forms, you would get such a low risk to reward down here that it's not even worth it. You can actually predict when to sell whilst we're inside the breaker, giving you a huge risk to reward compared to what you would get in these low hanging fruit scenarios. Now that's the key thing. In these low hanging fruit scenarios where there's not much red news, there's not much volatility in the market, and we are aiming for what we call low hanging fruit objectives, like easy lows and near lows. So if you like, for example, if you measure this distance from this move, that is a 22 pip move, right? Now 22 pips is a lot. If you can catch 22 pips consistently, you will be a great trader. But the point is, price moves a lot more than 22 pips on the average day, right? But on these days where we have low volatility, and we can expect this low volatility through things like lack of red news and other things, on days like these, this little tool that we can predict when to sell and buy inside a breaker already becomes really useful for us to give us an actual risk to reward that is worth it. Now I want to show you the perfect example of what I'm exactly talking about. Now remember I said this is useful when we have large range breakers. So I said it's useful on low hanging fruit days and when we have large range breakers like this one. As you can see here, many of you may not see this as a breaker or may not be anticipating a breaker here, but with a bias that says price should go higher, we have a low and the price runs up a high. Remember, it doesn't matter that we're on a 1 hour time frame. Price is fractal. The same things you see on the weekly time frame happen on the 1 minute. Okay, so the same concepts happen here. We have a low, high, we have a low, a high, and then we dip down below this sell side liquidity down here and then start to move up. Now, assuming that our draw on liquidity is higher on the weekly time frame or the monthly or maybe the daily, whatever, it doesn't matter. When we're inside here, we can predict that price is going higher, right? Which it ends up doing. We can predict that price is going higher whilst we're trading inside these, I think it's 5 up close candles, right? So, anticipating price to go higher, what can we expect this to turn into? A low, a high, a lower low, and then we can expect it to turn into a higher high, and then a breaker, right? So, when we start trading inside this range, we have a little spike up, and then this return, this can be your buy. This right here, the confluence of the fact that we're trading inside a higher time frame breaker or a larger breaker here, this can be your buy, right? So let me break this down for you. We have the high and then we have the low of the breaker. Now, again, split our breaker into premium and discount. This level here, or it should be the other way around, sorry. With this level here be below the 50% mark, is our discount. So this green shaded area you see, if I remove all of this, this is our discount, right? So we extend that out. Below this level, we want to be buying, and then above here, we want to be selling in a normal market. Of course, our draw on liquidity is higher now, so we want to be looking for buys. So take the breaker's range. These 5 up close candles is our breaker. We are anticipating this to be a breaker. Remember that. It's not our breaker yet, but because our draw on liquidity is higher, this will become our breaker. Now, do exactly what we did, take the range. And notice how when we had this pump up here, we didn't take out this high. So many of you wouldn't be buying inside here. Well, I wouldn't be buying inside here, but many of you wouldn't want to buy when we come back down here because we haven't broken this high up here. But with what I'm teaching you today, you can predict that we can buy whilst we're still inside this breaker, even though it hasn't left the breaker and then come back down to it yet. If you look, we trade up, nice move, and then remember what I showed you within this green area. Make sure we have a discount array in this case, premium for selling, but since we're buying a discount array inside this green shaded area, straight away many of you will see this where we have our fair value gap right inside here. Now, between these candles, we have a gap in price. Price moves up, and then in the discount of our breakers range, we have the fair value gap. So let's list our confluences here. Breakers range, discount. Draw and liquidity is higher, that's number 2. Then if we take this swing low to this swing high, we're in another discount and OTE. So that's 3, 4. And that is our 4 confluences right there. You can see we have a nice reaction, moves up, comes down, OTE between these, OTE here, price moves up again, breaking this swing high, dips back down, OTE once more between these, and comes back into the top of this fair value gap. Notice how I'm piecing all these confluences together now. We then break higher, and then we have institutional order flow entry drill between these candles. Now I'm diving a bit deeper here, so if you get lost in the terminology, don't worry. You will learn all of this if you keep following my videos. Now, institutional order flow entry drill, when we dip back into here, and then we run to clear out this failure swing and the liquidity above these. Now, without going into detail in what I just said all here, I will do that another time. But what I want you to focus on is when you know what a breaker is and how to actually use them, is fine. But what you'll find is we don't often return to them. Well, I mean, we do often return to them, but when we don't, it can be, it can be brutal, especially if it's a higher time frame one. Because you're sat waiting for a return here. Now, it does eventually, but notice how it moves lower and lower. It lags about, right? This was our price move. So eventually it'll return to it, but we've already taken longs inside here, right up until here, above these highs. So using this and the knowledge of this can help you so much in your trading, especially in scenarios where we have this on like the hourly time frame or the 4-hour time frame, because you can frame so many different trades on a smaller time frame just around this. Think how many entries I just pointed out there: the OTE, the return, the institutional order flow entry drill. These are all entries you would have missed just while waiting for price to come back down here, all because you didn't know about this one thing, that we can split the breakers range into premium and discount and do the exact same thing we always do. So with that being said, I don't have much more to say on this, and that brings us to the end of this video. Now, if you did enjoy, please do drop a like and leave a comment. Subscribe if you're new. I see a lot of you aren't still subscribed. I will be back uploading twice weekly, so more content coming for you. Make sure you check out the links in my description as well, and remember to use code LOZ at checkout for Funded Engineer if you are looking to buy a challenge account. So with that being said, thank you for watching as always, and I'll catch you in the next one.